Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
All right, let's start at the top. The whole story with Oklo. It really feels like it's defined by this massive potential on one hand and just extreme volatility on the other.
That's the perfect way to frame it. I mean, at its core, Oklo is an advanced nuclear tech company, but the key thing to get is they're not building those giant old-school plants.
Right, these aren't the projects that take decades and cost, $30 billion.
Exactly. They're focused on these small, fast-fission Aurora microreactors. Think in the 75-megawatt range. Much more manageable.
And that smaller size really feeds into their business model, right? The whole build-on-operate plan.
It's everything. They want to be like a modern utility, getting that recurring revenue for decades. And they're pointing it all directly at the biggest power user on the planet right now.
Data centers.
AI data centers. They are just desperate for the kind of reliable, carbon-free 2047 power Oklo is promising.
Okay, so that's the big, shiny vision. But we have to ground this in reality. Right now, the company is pre-revenue.
Completely pre-revenue, and that's where the tension comes in. They just reported their Q3 2025 results, and the loss was bigger than expected.
Yeah, I saw that. A loss of 20 cents per share when the street was looking for, 13 cents?
Mm-hmm. That's a negative surprise. And it shows you just how fast they're burning cash to get this off the ground.
Yeah.
The trailing 12-month loss is around $77 million.
Which sounds like a lot, but this is where the story gets really interesting. You have to look at their balance sheet.
You absolutely do. Because that $76 million loss looks very different when you put it next to their cash position.
Right.
As of the last quarter, approximately $1.2 billion in cash and marketable securities.
Wait, say that again? 1.2 billion.
Billion, with a B. It's a fortress. It basically takes the short-term bankruptcy risk completely off the table, which is what kills most of these projects.
So if you look at their cash burn, their own guidance is 65 to 80 million for the full year?
Right. So you do the math on that. 1.2 billion divided by 80 million.
Yeah.
They have years and years of runway. Maybe 15 years or more before they'd even be in trouble.
That changes everything. The risk isn't about survival anymore. It's purely about execution.
It's a long-term execution bet. And they're thinking even bigger. They filed a shelf registration.
Okay, for people who don't know, what does that mean in simple terms?
It's basically pre-approval to raise more money later. In their case, up to $3.5 billion. It gives them the flexibility to fund a huge fleet of these reactors down the line.
But it also means...
It also means a big risk of dilution for current shareholders when they do decide to pull that trigger. It's the trade-off you make.
So they have the money. The big question is, can they actually build these things? The regulatory side of nuclear is, famously brutal.
And that's the second major piece of the thesis. We're seeing a real shift from financial theory to, actual dirt moving. They've officially broken ground on their first powerhouse.
Where's that at?
At the Idaho National Laboratory, the INL. And it's not just a photo op. Earthworks started in October, and they're aiming for full excavation in early January.
So it's real. They're actually building.
They're building. And they're locking down the supply chain, too. They just signed a binding contract with Siemens Energy for the power conversion system.
Turbines and generators.
Yep, the SST-600 steam turbine and the SGen 100A generator. These are major components with very long lead times. Getting that contract signed moves a huge piece from the planned column to the in-progress column.
Okay, but this is all happening so fast. What about the regulators?
Well, this is where it gets really, really interesting. The whole game has changed for them. Oklo was selected for 3 projects under a new Department of Energy program. It's called the Reactor Pilot Program, or RPP.
In the RPP, what does that do differently?
Forget the old way where you wait 10 years for the NRC to approve every comma before you can build anything. The RPP creates a parallel track, a fast track.
So they can start building under DOE oversight while the longer commercial NRC license is still being processed.
Exactly. They're basically doing 2 things at once that used to be sequential. It could shave years, literally years, off the timeline to get the first plant online.
And is it actually working? Are we seeing proof of this speed?
We are. They submitted a key document, the Principal Design Criteria Report, to the NRC. It was accepted in just 15 days.
15 days? What's normal?
About double that. And even better, under the DOE pathway, the Safety Design Agreement for the fuel fabrication facility was approved in less than 2 weeks.
That's incredible. It shows the government is actually serious about this.
Very serious.
Hmm.
Which brings us to the third critical point, the fuel. You can't run these things without fuel, and the market for it for HEU is a mess.
HALEU being high-assay, low-enriched uranium, it's constrained, it's expensive.
Right. So Oklo's long-term solution is vertical integration. They've announced this massive Tennessee Advanced Fuel Center.
What's the plan there?
It's a planned investment of up to, $1.68 billion to build the nation's first privately funded used nuclear fuel recycling facility.
Recycling used fuel.
Yeah, that's the amazing part. Used fuel from old reactors still has something like 95% of its energy left in it. They plan to take that waste and turn it into new metal fuel for their Aurora reactors.
So in the long run, they'd have their own closed-loop fuel supply. True energy independence.
That's the goal for the early 2030s. But what they're doing in the short term is maybe even more fascinating. It's their bridge fuel.
Okay, I'm
The
listening.
government is making up to 20 tons of surplus plutonium available to them.
Plutonium, that sounds intense.
It is. It's an incredibly potent fissile material. And here's the genius part. They can take that plutonium and blend it with regular, unenriched uranium. The result is a fuel that acts just like HALU.
So they get to completely bypass the entire HAEU enrichment process, the biggest bottleneck in the industry.
They skip it entirely. It's an incredible shortcut to get their first reactors fueled up and running.
Do we have a sense of how much fuel that actually is? 20 tons of plutonium?
The estimates are that it can be made into about 180 metric tons of Aurora fuel. That's enough to potentially power their first 10 to 20 plants. It's a foundational advantage.
And it seems like international players are taking notice too.
Oh, absolutely. Nucleo, which is a European developer, is planning to invest up to $2 billion to help build out this advanced fuel and manufacturing infrastructure here in the U.S.
So you have the cash, the regulatory speed, and a unique fuel source. What does the market demand look like? Is anyone actually signing up for this?
The demand signal is huge. Their pipeline of non-binding interest is over 14 gigawatts,
And that's mostly from...
mostly from AI data center operators. There's that well-known agreement with Switch for up to 12 gigawatts. It just shows you how much these companies need this kind of power solution.
Okay, but we have to talk about the stock itself. It's been incredibly volatile. It's way, way off its 52-week high of almost $194.
It is. And that tells you the market is pricing this purely on future execution. There's no revenue until late 2027 or 2028 at the earliest. It's priced for perfection, and any stumble will be punished.
And then there's the insider selling. That always makes investors nervous.
It does. You've seen the CEO, the CFO, other insiders. They've sold over 500,000 shares combined in recent months. That's over $50 million.
That's a lot of selling.
It is, and you can't ignore it. Now, to be fair, they still hold a very significant stake, about 19% combined. But sales at that size, they weigh on sentiment.
So when you wrap it all up, what are the analysts saying? Is it a buy or a sell?
It's completely mixed, which is exactly what you'd expect for a company like this. You have some analysts with very high price targets, up to $175, pointing to the cash, the execution, the fuel advantage.
And the other side?
The other side says it's overvalued for a pre-revenue company with so many hurdles still ahead. They have it as more of a hold. It's a classic binary bet. Ultimately, the investment story here is defined by extraordinary risk met with extraordinary potential. Oklo has the cash, the regulatory acceleration, and the fuel cycle integration to be a true first mover in the advanced nuclear space, directly feeling the insatiable power demands of the AI revolution. But until those non-binding agreements become revenue and the first electrons flow in late 2027 or early 2028, this remains a bet on flawless execution in one of the most complex industries on the planet. Be sure to subscribe and hit that notification bell so you don't miss our next stock breakdown.